Hello Sector Watchers, welcome to the show. This is the 175th episode of Sector Spotlight for Tuesday the 16th of May, and I'm recording this on Monday the 15th. My name is Julius the Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. We are going to take a look at the rotation for asset classes with a special emphasis on fiat currencies and cryptocurrencies. I think there is an interesting move going on in euro dollar as well as in Bitcoin against the US dollar. And then we'll take a look at sector rotation, and I'll revive or reintroduce the concept of what I call a double benchmark, and then more specific for the communication services sector. Stay tuned, ladies and gentlemen. This is Sector Spotlight. Looking at the rotation for asset classes last week, we have the daily RRG on the right, weekly on the left, and we can still see how detached Bitcoin is from our benchmark, VBINX, and the other asset classes that we have on this plot. In general, still good, because it's way up to the right, so that means that there is a very strong trend, or at least relative trend, versus these asset classes ongoing for Bitcoin. But when we look at the daily, we can see that there is, at the minimum, a temporary setback going on. So let me start to tick this off. We all know where Bitcoin is. Makes the other asset classes a little bit more visible. And we don't have to do that here because Bitcoin is right there. We've got GSG and DJP, that's commodities, deeper inside lagging. And that's corresponding with what we see on the weekly RRG, because you see that those two tails, GSG and DJP, they're far to the left, very low readings on the JDK-RS ratio scale. And the last node actually hooked to the left. So it's not a very strong sign, and especially with the tails on the daily RRG picking up a little bit of momentum, but it's not very much. So I'm also gonna switch these two off here. We'll have a look at DJP in a minute, but for the rotational image, I think that we can safely assume or conclude that commodities are still not all that good. So I'm fitting this one right here, and I'm gonna take them away here as well. And we see Bitcoin moving that big move down there. We'll take a look at the chart of Bitcoin in a second. And now we can get a better picture of what's going on with the other asset classes. One that triggers me is the US dollar. It continues to improve. And you can see that on the daily RRG, it's moving into the leading quadrant. So I definitely want to take a look at the chart for the US dollar because it seems to be strengthening again. And if we look at the tails for stocks and bonds, bonds is also corporate and high yield bonds, we can see that the rotation in favor of fixed income is still ongoing. But as we discussed last week, it's all very close to the benchmark, and the relationship itself is more moving sideways. And you can see that back here on that daily RRG, where SPY is inside weakening, but making these kind of zigzag moves. That's not very clear. And the same goes for government bonds. And then you see corporates, well, I mean, the last 3 days is not doing very much, and high yield is just hooking around, and it's all taking place very close to the benchmark. So I think the conclusion for the stock bond relation needs to be that it's stable. I would say not a very clear preference. Maybe for the short term, a small preference for the fixed income related, so for government bonds, then corporate, and then high yield. But from a portfolio level, I would stay very close to my benchmark if that's what you need to do, and otherwise quite careful with heavy positions in either asset class anyway. If we look at the individual charts, because that's where things get probably a little bit more interesting, and I want to start with the US dollar because obviously it's important. And what we can see here, for weeks we've been struggling with that level just above 100. And last week it looks as if we just got getting off that support area. That last week was a very nice bounce upward, and it looks to detach itself from that support zone. And what's going to happen next is obviously going to be very important for the further move for the US dollar. But the initial move here, I think, is promising. And okay, you could be looking at 104, the 104 area again, and maybe later 105, 106. But let's try 104 first. It's better visible when you look at the daily chart of euro dollar. Then we can see how that is now definitely rolling over. We've tried, this is mid-April, tried three clear times to break that 110 area, didn't work, and we're now rolling over. And that previous low here, that's around 109.40, that was our kind of trigger. Maybe if you want to be a little bit more conservative, 109.20, but I think that we can now safely conclude that euro dollar rolled over, and we're looking for support roughly in the area 107.5, I would say. This is my line is a little bit higher, it's 107.60, but you can see here this peak was 107.35. We hesitated a little bit before breaking, then we broke it, then we tested it as support, we broke it again, we tested it a few times as resistance, then it was resistance again, we broke it, then it was support again. So that looks to be an area where the market sort of hesitates every time it nears it. So that's the first level that I'm watching for euro dollar, around 107.5, 107.75 in the next week or two, three, probably. That's my assessment right now for euro dollar. If we go to the S&P 500 to SPY, and that trading range that we annotated here is still in play. 416, 417 is overhead resistance. I mean, if the longer it takes to break it, the more difficult it will be, and we may see a little bit more of a decline. Very unclear at the moment. I'd say that we have now a new support level building up around 403, 404. Between those lines, let's say 404, 417.5. We gotta label this as sideways. It is what it is. Also, if you look at the RSI, it's hovering around 50. No very clear direction of trend in either way. The daily gives a little bit more color here. Here is the annotation. Here's the 404 area and the 415, 417. A break either above or below will dictate the next move in terms of days and weeks. It'll still be a short-term move. If it breaks lower, the odds are for a move towards 380. So the P&L, the potential P&L for a downward move is probably a little bit bigger than when it breaks upward, because the next resistance area is already waiting around 430. Nevertheless, S&P kind of ended its downtrend that we saw in 2022 and is now moving sideways, and we're waiting for a breakout to give us a little bit more of an idea and a little bit more guidance about where the market will go in the next few weeks. If we look at IEF, I think that now around 101, just below 101, there is now a clear resistance area building up. I labeled it around 100 a while ago, but it seems to be moving to 100.75, 100.1. We tested that level 1, 2, 3 times now, and we again dropped back. So when that is taken out to the upside, that's definitely a good sign, and we'll probably see a further move towards 106. Arguably, that would be a good sign for the stock market. When bonds break upward, that pushes yields down, should be good for stocks. We'll have to wait and see how that plays out, but that's the image that I get for the time being. I promised you DJP commodities. It's hovering at support, but what's worrying or not so good is the move of the relative strength line, which is moving to a new low. which means that in this group of asset classes, commodities is weakening, and we've got another signal for more weakening, more weaker relative strength versus VBINX. And on the price chart, we're sort of hovering above 30. If 30 gives way to the downside, we can also see a little bit more downside in terms of price for commodities. So in the commodity space, I don't think we'll see a lot of upward potential in the next few weeks. And then finally, Bitcoin. We saw Bitcoin way on the right-hand side on that weekly RRG. That longer-term picture is definitely still there, but I want to focus a little bit more on the shorter term because it looks as if arguably a head and shoulders pattern has been completed for Bitcoin. So the peak would be around 31K. That neckline is then labeled around 27K. That's $4,000. If we project that lower from the downside, that's 27, 27 and a half, then we would get to 23, 23 and a half as a target, which would be somewhere here in kind of no man's land in terms of support and resistance. However, 25K, I think, is still a very important support level. So if this head and shoulders materializes and the current rally is a pullback towards the neckline, it shouldn't go much higher then. Then we will see support kicking in around 25K. If that gives way, then certainly we can see prices moving lower and we can work the target coming off that head and shoulders pattern. However, failed patterns are usually very strong. So when we see Bitcoin breaking back above its neckline, so not respecting that head and shoulders pattern downside potential, but reversing it and making it a failed head and shoulders pattern, then I think that the next move will be towards 31 and possibly higher, because failed head and shoulders patterns are usually very bullish. So it's a bit of a make or break situation here. Given the longer term trend, given the big turnaround that we've seen in Bitcoin, I'm quite reluctant to make the call that Bitcoin has now completed a massive head and shoulders pattern as looking for more downside. 25 is a very strong support level. If that holds and we break higher, 31 is the next target and possibly much more after that. When we look at the rotation for the sectors, there is an interesting situation going on. Let me first start with the usual daily and weekly RRG for the cap-weighted sectors. So we've got the weekly on the left and the daily on the right. We still have the dominance, the leading role for communication services and technology, which is actually confirmed here on the daily, with XLK is still moving to the right. Communication services lost some of its relative momentum over the last couple of days, but given the strong move on the weekly, I am not too worried about that yet, probably I need to say. No, I'm not worried about that at all, actually. And the one that's interesting here is consumer discretionary, because the weekly tail, and this is interesting, you can see how the nodes here, so this is the RRG velocity, got smaller and smaller and smaller, and now XLY, consumer discretionary, is basically leveling off and moving to the right again. And that's when you see these nodes, these segments between the nodes shortening, very often that leads to a turn, to a move in a specific direction for that particular sector. And that seems to be happening now for consumer discretionary. And you can see here's the opposite going on the daily. You see how the segment, how RRG velocity is actually increasing for the consumer discretionary sector. I thought that's an interesting observation that I actually want to keep a better eye on, because it is pointing to improvement for the consumer discretionary sector. So we now have technology, communication services, and consumer discretionary inside the leading quadrant, both on the daily RRG and the weekly RRG. And as you know, consumer discretionary and tech are the most important sectors. Communication services is also not a very small sector. So from a cap-weighted point of view, there's quite a bit of market capitalization now inside the leading quadrant. If you look at the other sectors, then we see that consumer staples, utilities have started to turn around. And we can also see that happening here on the daily. You can see that staples came out of leading, moving into weakening right now. You can see that healthcare is moving inside lagging, and utilities continues to move to the left. And that is confirmed here with those weekly tails inside improving. Is this a new move back to more offensive sectors? Probably a little bit too early, but the move that we've seen with a lot of money streaming into the defensive sectors, at least for the time being, seems to have stopped right now. Sectors that are really weak, definitely weak, are energy, inside lagging, and financials. Real estate, here is industrials, and in the back of it is materials. And you can see that that is actually quite confirmed here on the weekly. We've got financials, that's right here. Materials, that is right here. So on the daily, picking up a little bit of momentum, but very low on the JDK-RS ratio scale. We've got healthcare moving there, utilities, and real estate. We saw real estate right here. So that's a bit of a shift moving on. Now, I'm sure that you have probably read or heard of, made the same observation yourself, that this rally, that the market currently is on a very narrow breadth, that only a few stocks are actually leading the market and carrying the market higher. And when that kind of situation arises, it's always interesting to bring in the equal weight sectors for the S&P 500, because they're not influenced as heavy by those mega cap stocks, because they're all equal weight, right? Now, if we do that here on the RRG, that's interesting, because right now here on the right-hand side, we have the equal weight sectors on an RRG, and it's a weekly RRG. And compare that to the weekly RRG for the cap-weighted sectors. And what you see here is that that leading quadrant is actually heavily populated. We've got technology, that is also there on the cap-weighted side. We've got communication services, that's also here on the cap-weighted side. But we've also have healthcare, which is interesting because that is moving to the right here, and you can see how healthcare is actually, where's healthcare here? Let me find healthcare for you. Here is healthcare, it's inside improving, but losing a little bit of strength. The velocity is lower and it's right here. So quite some difference. That means that actually the smaller cap healthcare stocks, well, no matter how you can speak about small cap in a large cap sector, but let's say the smaller stocks inside the healthcare sector within the S&P 500, because mind you, all of this is S&P 500 stocks. We're not talking about mid caps, we're not talking about small caps. So the larger caps are actually keeping the healthcare sector down on the cap-weighted version. Here is RHS, that's the consumer staples, and that is quite different than what we've seen here for the cap-weighted version. We seem to be rolling over, doing the same here inside the leading quadrant. And the other one here is, I already had technology. Where are you? RHS, technology, utilities, of course. So here's utilities and here's utilities. So where we have seen that rotation to defensive sectors in cap weighted, we've also seen that in equal weight, even stronger, because they are now all inside the leading quadrant, and the sensitive sectors, so communication services and technology. So if you look at that, there is a very high concentration of sectors inside the leading quadrant, and that sort of is counterintuitive to the observation that the current market is on very narrow market breadth. The RRG for equal weight sectors sort of contradicts that, and I think that's an important thing to keep an eye on going forward. In a way, it confirms that the market is still heavily moving out of offensive sectors, so materials, financials, industrials. Here is energy. Energy is an economic sensitive sector, but the materials and financials are pretty clearly the weaker sectors at the moment, and that is confirmed in both the cap-weighted and the equal-weighted versions of the RRG. Most of the time we look at RRGs using a single benchmark. I do that too. That's pretty much the way to do it. However, there is another method additionally, and I call that using an RRG with a double benchmark. And I spoke about that. It was one of my subjects in my presentation for the CMTA symposium in New York 2 weeks ago. And what does that do? Let me try to clarify. On the left-hand side, we have the RRG for the sectors. And the sector that I want to focus on here is communication services, XLC. So that's right here. When you look at the RRG for the sectors, you can see that XLC is actually the highest reading on the RS ratio scale. And as a matter of fact, also on the momentum scale, as you can see. So keep that in mind. Let's put that chart right here. Now on the right hand side, I have the members of the communication services sector. And usually we display them against the communication services sector index. That's this graph here. Tells you which stocks are doing better or worse than the communication services sector. And we already know that the communication services sector itself is inside the leading quadrant and actually quite strong. What we can do here, and you can see that I've prepped this because I've already added XLC as a symbol in this group. Now what the next thing that I can do is change the benchmark for this group from XLC to SPY, so that's the market. And what happens now is that you get the individual stocks of the communication services sector with the S&P 500 as the benchmark. But because we've got XLC on the plot as well, and I highlighted it right here, and this is actually exactly the same. And here you can very nicely see how much stronger the tails of these individual stocks are rotating versus the S&P 500 than the sector index. You can see how that tail is actually moving right there, and it seems very short, but when you put it on a sector chart, it's quite big. And if you look at where it is, it's actually exactly the same position, just above 106. We can't really see that right here, but so here it is, around 106. You can actually see that it's exactly the same position. But because we have the S&P right here, and we've got communication services sector right here, we can now make an assessment, look at all these individual stocks against both the S&P 500 and the communication services sector. So that whole cloud of tails is actually shifted a little bit to the left when you put the S&P 500 as the benchmark. Now let's take away that one here in the red, so that's Dish. Where are you? Move you away and fit it, and we got a better handle. And I can show you even better how that tail of XLC is moving right there. Now, with that in mind, we can see that there are a few stocks that are super interesting inside the communication services sector. The ones that trigger me immediately are Liv and EA and obviously Google. Now let me bring up the chart of Google first. You can see that Google already jumped, has probably already made the best of its run. It's probably not a very good idea to buy it right here because there's quite a bit of downside back to the breakout level. If you look at Live Nation, that is actually still inside the range and it still needs to break out. This is a stock that I'd like to keep an eye on because if this breaks above 82.60, let's say 83, Then we have a very nice double bottom after a big downtrend with the potential of 65 to 80 something. So that's 15 to 17 US dollars upward potential, taking it back to the 100 level. So that's a trade that I'd be very interested in to exploit further. The other one is EA. Electronic Arts, not as nicely as Live Nation, but if you look at the series of lower highs coming in here, that's going to be challenged right now. If EA takes out 130 to the upside, that is definitely a good sign. There's a little bit more about 132.5, but if it takes out these resistance levels, then it could confirm the strong rotation of EA on this price chart, on this RRG right here. Now there's one more that you may want to be interested in, and it's a popular stock. It's Netflix, because it's inside the weakening quadrant and curling back up. And this is against SPY. When you would put it against XLC, it's inside the lagging quadrant, but it still has the tail moving up. And if you look at the price chart, then we can see that Netflix is pushing against 350 as a resistance area. The higher lows are still coming in. If we can take out 350, it's 375, and after that, potentially higher. So Netflix could be in for a new move higher when that rotation continues back towards the leading quadrant. And that wraps up Sector Spotlight for this week. I hope you enjoyed the show. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, live on StockCharts television. And you can catch the replays on our YouTube channel or any of the on-demand channels. I hope to see you again next week at a new episode of Sector Spotlight. Same time, same place.